Hello traders, welcome to the weekly Outlook and Setups volume 220. First of all, happy new month. December is here, Christmas holidays are coming, New Year's, and pretty much it is the last month of the year, the last trading month as well. And as I keep saying, we probably just have 1 or 2 weeks of trading until the market starts getting choppy. So of course, let's try to make the most of it. Now, in this video, we're going to have a monthly analysis because the monthly candle just closed. And of course, every month I look at the monthly time frame and try to potentially see if we are at any key zones or like if the market could potentially be going somewhere. So we're going to explore that. And also every single month, I pick a giveaway winner that I give access to everything that I offer, the Fanatic Way program, the Fanatic Flicks, the private community sessions as well, and everything that we have inside. And for this month, this is going to be Asanda, who has been here for the longest time, commenting on every single video. He prayed to me for probably a couple of months to share my trading with chart colors, which I eventually did. So thanks, Asanda, for sticking up, for showing up, and for always commenting. This is my way to give back to you. So looking forward to hear from you. Now, without further ado, let's actually head into the video because we have a lot to cover with the monthly time frame, doing a top-down analysis, and hopefully to get a clear bias of. Alright, as you know, we're always starting with $1, but before we do that, just a quick look at the economic calendar because it could potentially help us frame which days are gonna be the biggest movers. Like, for example, last week we had Monday and Tuesday with no news. It was pretty choppy. And then since Wednesday, that is when the market started rolling. So in December, we do have a couple of news. So some CPI for Swiss franc, but then we have a couple of speeches right there from the ECB. So very important. Everybody speaking, vice president, the president, and other members as well. Centix Investor Confidence, not sure what that is, but it's a medium impact. Then on Tuesday, again, you can see a lot of news. So we have interest rate for the Aussie. Very important. Then we have a lot of these HCOB composite PMIs, PPI for the euro, very important, and ISM services PMI for the US, very important news releases on Tuesday. Then you go on to Wednesday, interest rate decision for CAT, employment change right there, and non-farm productivity, retail sales for the euro. So a lot of news here as well. Then you go on to Thursday, GDP for the euro, right, and initial jobless claims for the US. And then you go on to Friday. Right here we have a German CPI here, and then we have, of course, non-farm payrolls Friday for the US. So as you can see, this week is packed. Like even from Monday, it is packed. So I do believe we should definitely get into focus mode because again, that is probably one of the 2 weeks that we're going to be trading for the rest of the year. The first week is usually the first weeks are tricky because you have NFP and the market is just kind of opening the monthly candle. And then the second week, of course, we're going to have clear price action. But then the third week, we're getting into the week of Christmas. So most likely the market is going to get slow. And that is pretty much when I'm going to be stopping trading and entering into reflection mode. Going through back the whole year, what happened, what did I learn, and what I'm going to take away for next year. Now, monthly candle on DXY, very simple. Again, on the monthly candle, we do not look at too many things. What we have is a very nice bearish candle. In fact, engulfing candle that almost pretty much engulfed even the whole evening star formation. You can see here from this monthly candle of September. Now, to the left, what we see is that the market printed this imbalance right here, that the market straight came into it, rejected and really closed above it. But how did it come inside? It came with this imbalance. And as I'm currently in a hardcore study mode, I am definitely like working on my plan and as well, because again, when you actually get a tough period, when you get a losing streak and a drawdown period, that is when you're the most motivated to make things better. So what I saw a lot of people is calling longs from this zone right there. But again, we have this on the top. And again, of course, fundamentals are right now supporting a bearish dollar, according to me, because again, hikes are, again, we still don't know yet, but if hikes are not, if the Fed doesn't really hike the rates anymore, then that is bearish for the dollar. And like the next potential monthly liquidity area is going to be down there. But again, the last trading month, so I don't expect to get it all the way down there. But of course, before we get into there, we have, of course, this monthly demand zone right there, which is also pretty strong. So slightly bit 50-50, but I'm having a more bearish sentiment on the DXY, also basing that on fundamentals. Then of course, dropping onto the weekly time frame, this is where it gets tricky. As I told you, this monthly demand candle is pretty much that same weekly demand candle, this massive sell to buy, right? But then what I always say is that I want you to have a look at the weekly candles, right? They were incredibly bullish, so we moved a lot, but I want you to have a look at the momentum, right? There wasn't really no single imbalance right there. The only one that was created was all the way down there, which we could potentially mark for a potential area that the market can be drawing into. But then I want you to have a look at the top. What happened last week is we have this weekly one. So again, with imbalances, they do not fill immediately. It's usually very good when it does because you get an immediate setup. But if they like print and then it comes like 2 weeks later, then maybe the market is already printing imbalance to the upside and getting to the upside with momentum. Now, this week looks very interesting. We push lower, we reject it. And again, you can see we're overall at 50% of this range. Right, you can see we just dipped below the 50%. There is still nothing to the left to give a clear reaction apart from this overall sell to buy right there. So there is also the long scenario, right? So if you start building up confidences like on the monthly time frame, it's this and that. On the weekly time frame, it's this and that. I do see also both sides. And then of course I'm going to be dropping on the daily time frame, which is usually where I try to stay at the like this is my highest time frame analysis. We have this very recent daily breakout structure. The market has this daily supply. Also, we did create an imbalance right here that the market filled, came into the supply, and right now on Friday we pretty much reacted from that supply. So again, right now the key question is, are we going to continue? Well, I would say my daily bias is bearish right now. So if I just solely focus on the daily, okay, without even looking at monthly and weekly, this is the last liquidity area that we took, which was my target. After taking liquidity, we initiate a pullback, okay? But will the pullback actually be a reversal or a pullback? Well, of course, we have to see the strength of the pullback. This one was strong, but right now it's rejecting. So let's see. If we continue pushing lower, then of course my next targets are going to be all the way down there towards that only weekly imbalance that we have. So this is DXY. Bearish so far. Of course, we are going to learn more from the Fed, whether they're going to hike or not. I think there was a speech this week and somebody said that it's still too early to say, right? Which kind of caused a little bit of volatility in the market. But currently on the hourly time frame, we did align bullish here. But then subsequently we broke up there and then immediately aligned bearish here, which currently makes the hourly time frame bearish, forming this beautiful consolidation, manipulation above, and reversal lower. Also, what I like to see with a little bit of an imbalance. So from all the top-down analysis, guys, you can see that the daily time frame gives us like what the higher time frames are doing, and then the hourly time frame, we pretty much refine the daily a little bit. And here's my conclusion. That is what I'm going to be looking for. That's it, right? So if the market decides to come in a little bit deeper, that's fine. I'm still going to be observing what happens within that daily zone. But that is what I currently see on the DXY. Very short, very simple, and I could have done this analysis in 1 minute, but of course now we're looking at more in depth. So there's a Dixie, bearish bias. Let's see how everything else aligns to that bearish bias on the dollar. All right, Euro USD, so pretty much the opposite to the DXY, but in reverse. We're having this overall bearish trend on the monthly time frame. We're having this pullback right now, and again for quite some, well, pretty much this whole year again, which is super interesting since January all the way until now. This is what we did, right? It's a consolidation. We didn't move much, right? We moved 800 pips and that's it, right? If you compare like, for example, 2021 right there, oh, there's nothing to compare. So next year could be actually pretty good because if we're chopping around all year, well, maybe next year could be pretty impulsive. Now, to get to the bias again, similar to the Dixie. Right, similar to the Dixie, we had this imbalance right here that was created to the downside, breaking structure, the market engulfed that, right? Right now we're going to be tapping inside this supply zone, so is it going to react? Is it going to flush, or is it going to continue pushing higher again? Guys, we don't know. But this break of a massive imbalance actually tells me a lot, because again, that could be used later to come back and act as support. And also if this month currently forms another imbalance, that is going to be coming in from here, for example, that is going to be very powerful bullish sign. So again, we have to wait 1 month to actually see if the monthly candle is going to reject right now and start pushing lower, or if it's going to impulse, form another imbalance right there. And then of course, we're going to have very clear targets probably for next year, targeting this high. Now, dropping onto the weekly time frame again, same thing. What is very important right here is that we have this weekly imbalance that got filled exactly on Friday. So we're tapping inside this imbalance and we're filling it. Now, the biggest question is, again, I really like, because currently I am into very big study mode, right? I'm watching, I'm back testing a lot, because again, when you enter into that drawdown period, which you're always gonna have, right? You are the most motivated. If you, of course, don't give up and get depressed, you're the most motivated person to just get better and to just figure it out what you're doing wrong, right? And actually reflecting back to it, what I did wrong is since I graduated uni and I settled in September in my new home, I got really excited to be full-time trading with no distractions, that I started doing random stuff. And pretty much that's it. I started changing strategies and I started doing new stuff, thinking that I have more time. And again, more time, more trades, less money. That's how it goes. So right now, again, tapping inside this imbalance. And again, next week is going to be key to see, is this going to reject and start pushing up? Or maybe are we going to maybe pull back a little bit lower? Again, guys, we don't know. But this weekly imbalance is very key to observe, because right now, the daily time frame on Friday just caused this little break of structure right now. Again, you know, I do take wicks as breaks, but I observe them. So again, this is a wick break. This is not a strong break. This is not really a change of bias yet, right? But how it also happened is with this massive imbalance to the upside on the daily. So this is what right now gets me a little bit 50-50. And usually when you're 50-50, look at the higher time frames. What is the higher time frame telling us? Weekly is bullish, right? So the market most likely right here, so Monday and Tuesday went into the highs, broke structure up, and then it just all of a sudden they just flipped, reversed, and whoop, pushed lower, causing a daily break of structure. But where did it actually go? Weekly imbalance, right there. So again, from here, a lot of things could happen. We could potentially pull back into that daily and flush even lower to take out the weekly low, and then maybe from there start reversing. Who knows? Or we can just start pushing from here because we feel that weekly imbalance. Okay, so those are my two main scenarios. But again, it's going to be tricky because you have to navigate also within the lower time frames. Right now, you can see the 4-hourly time frame is bearish, causing this valid break of structure with a body until we actually took out that daily low right here and filled the weekly imbalance, and look at the reaction. So currently, again, I could be giving you 100 scenarios. But I don't think it's very useful to do this because, again, we're going to wake up on Monday and the market is going to be doing something completely different. So I usually trade without a bias. I just jump into the market in the morning, right, on the charts, do my top-down analysis, what I'm doing right now, every single Saturday and Tuesday, and I just pick a bias based on what the market is doing right now. Because, again, I can tell you, well, right now the market could short from this supply to take out the previous weekly low and then maybe go long from here. The market from here could make a trend change and shift bullish. The market could make a 4-hourly trend change, but tap inside daily daily imbalance, shift and go towards the weekly low, right? And of course, the market could consolidate waiting for the news, right? So there are millions of outcomes that could happen. And of course, guys, I never give you like any specific biases and like very specific analysis that I'm going to tell you this is going to happen, because I think this is the wrong way to approach the market, right? So this is where I'm going to wrap up EU, right? Talking too much today. 4-hourly is bearish, which does not really resonate with the bearish bias on the DXY, which is very clear. So again, who knows, maybe we pop up to the upside. And if I start seeing very nice bullishness, I'm definitely going to go long because, again, we're tapping inside the weekly imbalance. The DXY is currently bearish. So, of course, if we get long signs, I'm definitely going to go long. But if we also get the short ones, I'm not going to hesitate to take a short. So again, guys, let's see how this week goes. All right, Euro JPY. The first thing that I see on the monthly is that, of course, we're overall bullish. But then, of course, you say, okay, well, what is the market doing right now? Well, what it did most recently is it broke a high. How did it break the high? Well, it had a little bit of a monthly imbalance right there, which is what I think is the current liquidity draw. So this is where the market is potentially going right now. And you can see the brand new month opened for just one day and we're almost there, right? So this is very likely where the market is going right now. Then, dropping onto the weekly time frame, well, you see a massive push on the weekly. Massive push. And it was actually pretty good because it was forming an imbalance. It was very strong. There is the weekly one. The market came in, tapped inside, reacted, but failed to continue pushing higher. And right now we're having a very big engulfing candle, which kind of introduces to me a little bit of a short bias. But again, we're most likely pulling back towards this overall big demand area, right? Because if I just take like a very big box like this, which is going to be our weekly demand zone, this is where the market is coming in, paired with that monthly imbalance. We have another weekly one right here. So very bullish market. However, we're right now having bearish market, right? Because the daily time frame, well, yeah, it massively pushed up, but right now we're starting to align bearish. Now, in terms of valid structure, I would say that this is my daily low, looking at my way of structure, but a lot of you might see this shift right here, MSS, market structure shift, and you might say that this is your break of structure, and that's fine. Because if you just look at it and ask the very simple question, what is the market doing right now? Well, this week we have 5 bearish days. So the market is going down. Very clear, very simple, okay? But where is the market going towards? Well, I would say this monthly imbalance and of course the overall weekly demand zone. So tricky, but if you manage to get any shorts towards that zone, that is very good. But as soon as we tap that zone, then you have to start getting a little bit more careful, okay? Transferring that on the 40 time frame. Again, lessons that I'm learning right now is that, again, sometimes we try to trade USD pairs and USD, and the USD are choppy, but look at sometimes how the JPYs go. Here, absolutely beautiful bullish trend. Trend change to the downside. Absolutely beautiful bearish trend, right? And then we try to trade GU or UJ or like a USD pair. That is just doing nonsense, right? So definitely for next year, I'm going to start looking at JPYs, especially EJ, because I really like the euro. And I find that euro yen moves the best. Now, 40 time frame, massive drop right now. So when the market is at a lower low, you can expect a lot of things. You can expect, of course, a very brief pullback and a continuation lower. You can expect a straight continuation lower. You can expect a bigger pullback all the way up to form a lower high and then a continuation lower. But what I'm going to say is that this potentially is my target in terms of the monthly. And then as we tap there, that is when it's going to be time to start observing again the daily and build a bias. Okay. Right now, bearish, short-term bias, driving us into that zone. And as soon as we tap into that zone, of course, we have to start observing. Or if the momentum just continues to persist, well, yeah, of course, we can keep shorting because maybe the market is going to reverse. So that is euro yen. Very nice, very simple, looking for shorts. Again, how it's going to play out, we have to wait and see. But those are the scenarios that I'm going to be looking for. Here we are with the Aussies, starting from AU. Now, a very lovely bullish month. In fact, a pretty strong one, because if you compare these 2 months to this one, well, this one is strong. It has a smaller wick to the upside. The body is full. It looks strong. Okay, so that can immediately tell us a lot, that the market has a bullish sentiment. Of course, the next liquidity target could be this one, but similar to the rest of the pairs, the market is encountering right now a potential supply area or a demand area if you are, of course, looking at the USD pair. And yes, we could start getting a reaction from here, but looking at how it's impulsing from the downside, then I would say that we're most likely bullish. Okay, so that is my monthly time frame analysis. I don't spend time there at all. Then dropping onto the weekly had a very tough period right there, August all the way until October, or all the way actually until November, when we just popped out of this consolidation. We had a quick pullback, then we had a quick push, and then we have 3 bullish weeks. What we just formed this week is a very lovely weekly imbalance right there that could potentially be a reference area if the market initiates a pullback, okay? And of course, yeah, you see to the left, this very big buy to sell that the market is currently getting into supply. So we could expect a potential pullback. But I would say I am definitely more bullish than I am bearish on Aussie dollar. Again, since the daily time frame here aligned bullish, pulled back, tapped inside the demand zone right there. Massive push with imbalance, filled imbalance, higher highs, higher lows, higher highs, higher lows, higher highs, right? So this is a clear bullish trend. Now, what are we doing right now is we're coming into very close towards that daily high. And as we break this daily high, again, guys, the higher the market goes, well, of course, the higher the chance for a pullback becomes. So let's see, I would expect for it to most likely break that daily high the first thing and then initiate some sort of a pullback. And if the daily doesn't form any sort of imbalance right here, I would say that most likely we're going to come back to fill the weekly and then expand higher. Okay, but again, that is most likely going to take 2 weeks. So I'm not really sure if that is going to happen. Now on the 40 time frame, we had a shift bearish here. But again, when you have that 40, so this is something that, of course, why I started implementing the daily a lot. Because sometimes you have this 40 bearish shift and you become bearish, but no, this is just a pullback. This is just the market filling imbalance on the daily, and I actually called. I don't call stuff, right? I just show you what I think. But yeah, I believe it was on the Tuesday outlook that I outlined this imbalance right there, and pretty much as the market tapped inside right there, you can drop to the 50-minute time frame. There was a very nice shift, so I cannot have called this one because this one happened on Thursday, so maybe it's another pair that I'm thinking about. But yes, then of course you see you turn bearish on the FOIC, you draw this supply zone, the market comes in, reacts, but then at the end of the day it ends up popping. Why? Well, because of daily, right? Now we have, of course, this hourly bullish, hourly demand zone, okay? And of course, as the daily right now is gonna break, we're gonna have a new daily higher low to daily higher high. So what can I say about this one? Not much. We could break up, start pulling back, or we can just start popping. Because again, when your bias is clearly bullish, the market sometimes just start popping. And of course, another mistake that I do is that, for example, here you have a break of structure and you start looking for some sort of a pullback. Well, the market can just keep popping and popping and popping up until, yes, eventually decides to pull back. But just because there is a break of structure, don't immediately start expecting the pullback. It usually happens, right? If you observe it, a lot of times the market is going to break, it's going to reverse, it's going to break, it's eventually going to pull back, okay? Bullish bias on Aussie dollar, trying to speak a little bit less right now. Let's see how it plays out. But again, as the market is at a higher high, usually tricky. So again, let's see how it breaks this daily high and then what it continues on doing. Of course, fall is going to be bullish. We already have that very nice imbalance being filled. So if we have a break, pull back into that, I would definitely expect the continuation. And if nothing from here holds, then of course you know where the market is going to be going, to the higher time frame imbalances. So that is AU. All right, Aussie JPY, well, overall bullish month right there, which is very good. Breaking this sort of, I'm not sure if it's internal. Yeah, I do think it's internal because still on the monthly we're trading between this low to this high. We pulled back right here, and right now we're on our way up towards this liquidity target, which I do believe it still hasn't been taken yet. So that is a very clear monthly liquidity target. And then of course we drop on the weekly time frame. We had this very bad period for like the JPYs overall, chop. But right now we started picking up steam, and we're just at the top. So I don't like the positioning, right? Well, in terms of the weekly, I don't like the positioning. It's breaking weekly highs right here. It's very high. It's very close to that liquidity area. So I mean, you could definitely try to long it towards that area, but as soon as we take out that monthly high, then of course the market is either just going to massively start running above it, or it's going to reject and go lower. Now daily time frame, very clear. I'm just going to mark our higher low formation. The market just pulled back into the imbalance, perfectly filled it, and perfectly respected the 50%. Reacted back bullish. Again, how did it react bullish? By creating another imbalance. This one we did not really respect, but we tapped inside and we're reacting for 2 days. So very key thing to observe here is that we have some weak lows here. If this low fails to cause a push higher, that's a weak low. If this low fails to cause a push higher, that's also a weak low. So what are we building here right there is a little bit of a trend line, and these two lows right there. So I mean, a lot of things could happen right now. These imbalances are filled very good, but again, like I really like this imbalance because from here we pushed higher with momentum and we created another one. But then if this one fails right here, then we might pop down to take some liquidity to fuel a move higher. So keep that in mind. If we do not immediately start pushing higher, then most likely this low and even this low, they could potentially become liquidity so that the market can seek that monthly objective. And then of course you drop to the hourly time frame. Damn, this one is not clear. Whoa. Yeah, anytime I just jump on a chart and I'm like, oh, what the hell is doing? What the hell is this? I'm just gonna skip it. So this one, honestly, on the hourly time frame, this is the last break of structure. And yeah, I would say you could take this as a hourly breakup. Not according to me and my rules. To me, this is still the lower high right there. But the market again tapped inside here, reacted, and it whoop, popped up to the upside. How did it pop up? With a little bit of an imbalance right there that got filled, and we're reacting from it right now. Honestly, I don't like this. It's not really clearly pushing into the highs. It tries to push, but it fails. So I have a feeling we might pop down. Aussie is very bullish. JPYs are also kind of a little bit 50-50. So if you ask me, I wouldn't trade AJ right now. I don't even know what to say on this one. Again, I would expect these lows to get taken as liquidity, but I also would expect for the market, if something happens, we have interest rates for the Aussie, I would also expect for the market to pop up, take out that monthly high, and then from there, I would say stop trading this pair because we've taken major liquidity. So that is AJ. Not clear, guys. I cannot really force it. The NZD, very similar to the Aussie. We're having a very nice bullish month, very big engulfing candle, and once again, similar to the rest of the pairs, it is tapping inside this monthly supply. But also what I see coming in from the left right there is a very nice pop to the upside, and then a whole year of correction. So is it time right now to start popping? This looks like a push, like an impulse correction and impulse. Back in the days, I was trading these kind of flags and impulse correction impulse. Let's see. Weekly time frame, rather bullish as well. Consolidated, broke the lows, weekly trend change right here, and massive impulse to the upside. Very little tiny imbalance right there in the weekly that was created this week, which is very good. We had similar tiny little bit here, which it got filled, and then the market just forgot about us, right? Extremely bullish week, like didn't even close with a wick on top. Very nice. Dropping onto the daily time frame, absolutely popping. And this is what I tell you guys, when you have a break of structure, sometimes the market just massively keeps rolling. So don't start expecting those pullbacks. Like that's a mistake I've been doing all year, as I'm starting to reflect right now, right? You have a break of structure and you immediately start expecting that pullback. No, keep moving, right? Keep moving into the highs, right? So currently, again, yeah, on the daily time frame, that is our last daily break of structure. In terms of imbalances, this is one that is filled, so we're no longer gonna use it, and that's it. We're just at a big high, so I have nothing to say, honestly. Dropping onto the 40 time frame, we could potentially see a little bit more clues right there. Unlike the Aussie dollar, this one is already breaking the high, so we have, of course, this folly overall demand zone right there. And again, it looks very high. It looks very high. So what I would say is that if it's gonna continue going, that is a likely outcome, but if it decides to start pulling back, you immediately ask the question, where? Where is it going to pull back? Well, this daily one is filled, so only the weekly one is left right now, and I guess then, of course, we can start just draw a daily fib like this, and we can expect a 50% pullback. So that is the NZD, extremely bullish. That is how the structure looks like right now. The market pullback through a little manipulation on Thursday, aligned quickly bullish, and right now just took out our objective. So we have to wait and evaluate what is going to happen next. But overall, bullish bias. Well, NZD JPY being a JPY, it's most likely going to be tricky, but overall, massive monthly candle closure, creating this very nice monthly demand zone right here as well. Then dropping onto the weekly time frame, it keeps pushing higher, and what I see is a left right there imbalance that hasn't been filled. The market strongly impulsed away from it, not making a new one. Currently very high, and of course when the market is that high, it gets a little bit tricky to operate. We're having a daily break of structure here as well. Not the strongest, but it is there. What caused that break? It is pretty much this low right here. No imbalances to fill here on the daily. We had one right there, it filled it. That is what caused the move higher. So again, to me, it looks a little bit like time to pull back, but we don't know. Again, as I told you, the market can just start popping bullish candles right here. Then, of course, we're going to drop to the 40 time frame where we're also going to have a bullish trend. Yeah, exactly. There is the daily break. That is also the 40 break. So the market is currently pulling back, actually getting ready to potentially go long from here. But of course, it's either going to go long from here to create a weekly high and then to potentially see what is going on. But if the market opens bearish, to give us a slightly bigger pullback, and then of course 15-minute setup from here, that is what I would love to take. So that is NJ, overall bullish. Just keep in mind it's getting a little bit high, but of course, as long as the market keeps pushing, you just keep following it, right? All right, USD JPY. Now here we're having a bearish month, and what is really surprising for me is that, so again, maybe on another broker it did take it, but on Oanda, maybe I have to be checking other brokers, it didn't really take out this high right here. So let me know if it actually took it on another broker. I know Forex.com is good right here, but yeah, I don't think so. Exactly the same. So why didn't it take it and started retracing back lower? I don't know. Right, so again, bearish dollar right now is causing the JPY to also reverse a little bit. Monthly candle closure bearish. It didn't really engulf, so rather kind of tricky to build the bias around that. Then it dropped on the weekly time frame again after a very big chop right there on the top. We had this manipulation higher, which took out that high, but it didn't take out the monthly high. And right now it looks like we're having some sort of a weekly shift. Okay, so there is no clear structure, there is no clear imbalances right there to refer to. On the monthly time frame, there is also not, right? This push-up did not create any monthly imbalances. On the weekly time frame also. So if this happens, the market is then usually going to seek some sort of liquidity. And if I have a look at the monthly time frame, well, yeah, I mean, the only liquidity that I see is going to be below this low, right there and all the way below here. So are we going to be having a JPY reversal? I don't know. I don't want to be calling tops and bottoms and reversals, but having a look at the daily, we broke up here and then we broke down there, daily shift. And then since then, like lower low, lower high, beautiful lower low right here as well. And right now we're technically staying at that lower low. What did we do? We already pulled back into the imbalance, perfectly respected right here. And Friday is pretty much making the move lower, kind of already making another daily break. Yeah, I think so. So yeah, bearish bias, super clear bearish bias. Of course, right now we can start looking for daily liquidity points. There's the most recent one we reacted. So there's the next one. So that is the, again, don't look too far. Just look at the next one. There is the next one. So as the market takes this one, then I expect the pullback. So I would expect like that could get taken within a day, right? 100 pips, take it, and then maybe expect a pullback. Or again, as I keep telling you, just because a high or low was taken, don't expect that pullback. Just keep going with the bias until you're actually told that the market is going to reverse. Here's the hourly time frame. It was bearish all the time. There is the supply, hourly high, hourly low. All of this is internal. The market pullback tries to push lower, fails, comes to take this as liquidity, accumulates, and then pretty much again on Friday. The move was on Friday. Speech, boom, all the way to the lows. Right now, that is also a hourly break, which makes this our overall brand new hourly supply zone. So again, guys, tricky. Pullback and a flush, or the market can just open, maybe a slight bit of a pullback, and it can just run into the liquidity target. We don't know. But I'm going to see bearish bias overall on the USD yen, which means that the rest of the yens should be bearish. Let's see. Here we are with the GBP, starting with GU. Let's break it down. So again, monthly time frame closure, a very nice bullish candle forming this overall morning star formation, which is a very good sign. And what I like about this one is that it has a little bit more of a context. Like here at the bottom, we pushed up, imbalance, filled, pushed up again. There was not really any monthly imbalances right there, but what I liked is that this overall area is getting respected right now. So in this terms, it is actually incorrect to say that this is supply because it hasn't really broken any sort of monthly structure. Okay, not that this one has broken, but at least it looks like a valid range to me. But of course, overall the market is bearish. But just because the market was bearish in 2021, I don't trust monthly trends. Because yeah, the trend on the monthly is bearish, sure. But then since October 2022, for a year, we have been bullish. So you cannot really remain bearish, right? Of course, if you're a day trader. Now, dropping onto the weekly time frame, some again important things are happening here. We are trading with a lot of momentum to the upside. Like GU is much faster than EU, and I'm still working hard on that pair because I've been trading it since recently. Weekly imbalance not filled. Another weekly imbalance. Is it going to fill? Well, we're going to be seeing next week. But of course, if the market starts rejecting from here, the potential liquidity target will be that weekly imbalance. But very strong 3 weekly candles. Dropping onto the daily once again. So again, another mistake. The market breaks structure. You expect for it to pull back somewhere. No, just keep longing. There you go. Like Thursday, Friday, Monday, Tuesday, bullish. All the way into Wednesday when it actually showed us it wants to pull back. Bearish candle, made the pullback, and already on Friday we're popping up. Okay? So what we have here within that weekly imbalance is a little bit of a daily one, which is the most recent one that hasn't been filled. So again, you can see I'm stacking a lot of imbalances right there. I don't like it, but we have to keep note of them. So yes, we are also pretty high. That is going to be the next daily break, which is where the market is potentially going right now. So very strong. If you have a look on the left, I only look to the left to potentially have a look at some liquidity areas. Those are the two most recent liquidity areas right here. So if there was some sort of supply right there, it was already reacted. So right now the market is time to continue trading higher. So absolutely bullish bias. The question is it going to commit from here? Is that the pullback? for the market to take out all these highs, or are we going to first initiate going lower, daily and weekly imbalances, and then maybe start popping? Well, of course, we are going to see. Then, of course, dropping onto the 4-hourly time frame. The 4-hourly time frame had, again, a little bit of a liquidation right there, I would say, because according to me, that was the higher low. Of course, if you take this one, immediately everything changes, right? Because I do think this is actually the one, because yeah, this is pretty much the high. Then we traded lower, we pushed up, we traded lower again, and then we broke up. So again, wouldn't really, because it's a matter of like 3 pips. If this is a break or if this is a break, right? So not sure. We could definitely say that the market is still bullish on the 4-hourly, but even if it's not, then there is your next break, bullish. And then of course there is your demand zone right there. And also there is your 4-hourly imbalance right here. So there are a lot of bullish signs on GU. So of course what I would expect happening is for us to maybe initiate a little bit of a pullback and then potentially start hiking higher. Or of course on the open, we can immediately start hiking higher towards those liquidity targets. Now keep in mind news, we have a lot of news, but I do feel like the majority of the news this week is Euro and USD. I'm just checking my calendar and there is not a single GBP news that I see. So that means that the GBP could potentially be either slow or it could just decide to start rolling to the upside, okay? So that is GU. Nothing more to say. We already did make the pullback. So of course the next target is going to be this high. So I don't think we're going to be pulling back all the way down. It doesn't make sense for us to start pulling back all the way down just to then take out that daily high. I do think we can take that daily high and then maybe we can initiate the pullback, because that is where the next liquidity is going to be. So bullish bias on GU, very simple analysis. Let's see how it plays out. Let's see how it opens on Monday. And then of course we're going to flow with it. GJ on the monthly time frame, well, bullish. We're having a monthly break of structure, which is rather strong with a nice body. Of course, we have this week a monthly low to monthly high right now. Dropping onto the weekly time frame, we have a weekly low to weekly high right here. And yeah, is this imbalance filled? Yes. So, well, yeah, just a little bit, but I'm gonna mark it as filled. And right now, this week inside bar. So is next week going to pop up or is it going to pull back lower? Well, of course, that's what everybody wants to know, but it's not that easy. Here is our daily break of structure, daily higher low formation. The daily higher low was created with a little bit of an imbalance, which was just kind of pinked twice on Thursday and Friday. So is the market ready to pop up? That is again the question. Well, I do think so. It looks rather bullish to the upside and not that bearish to the downside. Then of course you drop to the 4-hourly time frame and you have this again, the market aligned bearish here. What does that mean? That potentially a pullback is initiating. But again, just because the market aligns bearish on the foliage, it can just pop up. And usually you have to refer to the daily to see if there is really something to get filled on the daily, so that the market has a reason to be pulling back even lower. And then here you have lower high, lower low, lower high, lower low. Here we kind of wicked it for a little bit. But then we also wicked it down for a little bit here. So it's starting to do some funky stuff here. So let's see. Currently, if you take this as a break of structure, which I wouldn't necessarily take, it just looks very weak. You can say you're bearish and this is your lower high. But of course, as you start seeing some bullishness potentially kick into this market, like a 4-hourly trend change, then just focus on getting longs. And of course, you target your liquidity up there. Or of course, you can go a little bit slower. That is going to be the first target. That is going to be the second target. Mini reactions from those areas. And then of course, all the way to the ultimate objective. So that is scenario 1. Right, scenario 2 is for us to maybe even pop even further to the downside. And then from there, if we start having a 4-hourly shift, then I would be really happy to long from there, because that right now is weekly and a daily demand zone. So that is my GJ. Bullish bias. Again, the question is how it's going to play out. Well, let's allow the market to show us how it wants to play out, because so far it's still kind of bearish on the foliage. So we have no signs of that 4-hourly time frame to align bullish. So we can actually clearly take longs towards the highs. All right, congratulations to gold traders and gold investors, because we're reaching all-time highs. And now I wish I had put some money into gold and a gold ETF. We are reaching all-time highs. Like after trying to tap this one twice and going lower for liquidity twice, finally we managed to tap inside, and you can see 2 beautiful bullish months. The third one is already rolling, taking out that all-time high. So again, right now, monthly low to monthly high is very clear. We have this sell to buy right there, very clear as well. So that could be a very good reference point for a long later. But right now it's tricky. we are just tapping in all-time highs. I think we took it by around 20 pips or something. So that is 2075 282, 2075 430. Yeah, so roughly around that 20 pips, let's say. Massive expansion higher, weekly zone and a monthly zone. So we have 2 points of reference to potentially get the next long from. And we formed this imbalance right there. That looks pretty low, right? So in order for this imbalance to get filled, the market has to print a massive bearish candle. So just keep this in mind that I don't really expect it. But again, guys, I mean, it's all-time highs. And what happens after we take all of that liquidity here? Well, I don't know. Honestly, I'm unprepared. I'm not trading gold, so I'm not really deep into it. But I think it's going to be exciting. So right now we're having, like, for example, this daily demand zone that is valid. We're having this one down there, but that is the most recent one right here. That is coming in from this very recent imbalance here as well. So is the market going to continue rolling up? Well, we are about to see. And you can see we had like the market even on Monday drove it high. Consolidation, news came out, whoop, popping into the highs, all-time highs. So right now, massively bullish. Of course, guys, what I can say is if I didn't know that this was all-time highs, I would say, well, of course, pullback and a continuation. Very, very, very simple. We have a very big 4-hour imbalance right there. So that's gold. As simple as that. Just keep in mind, guys, we are trading at all-time highs right now. There is very likely a lot of liquidity staying above. But let's see how it actually breaks it. Because this monthly candle can just continue piercing through the highs and not really like sweeping it, but actually continuing to push above. So as long as your daily time frame keeps popping up, just be bullish, right? Because again, at every single break, we start looking for the pullback. No, just keep rolling. You can see if you actually had that confidence that since here the market reversed, like after taking this liquidity down there and the market started showing us signs of bullishness, you could have been bullish all the time towards the all-time highs. So again, stick to your buys. That is gold, bullish buys. Let me know, guys, what you think is next. Are we going to keep breaking above all-time highs? Or are we going to start retracing? Let's have a look at indices, which have been slightly bit tricky, but on the monthly time frame, we are just rolling, and US 30 is coming in very close to all-time highs, and I do believe we could be reaching them this year because with the Santa rally, you know, December usually gets pretty strong. You can see last December we had a very nice pop-up to actually create that all-time high, and then since then we rushed lower. You can see November, December, we had a rally. So yeah, I'm not sure that if that is a myth, but the December rally is pretty crazy because we usually expect bullishness. Monthly time frame, absolutely bullish, taking that monthly high and continuing to go above it, right? Weekly time frame, absolutely ridiculous. Crazy 5 weeks right now of bullishness. Breaking structure, a lot of imbalances, nothing is filled. So you can see a lot of times as well. So as I keep learning about imbalances right now, again, sometimes the market just massively rallies and it doesn't feel anything when it has a clear objective. So right now we took out that high. Of course, we have this high also taken, and the only one that is left is the all-time high. So again, the biggest question is, are we going to be having any sort of a pullback? Well, again, guys, I have no idea. I have no idea. There is, of course, the weekly imbalance, and US 30. I mean, since the middle of November, it got pretty choppy, and it was actually really hard to say, like, is it rejecting right now? What is it going to doing? And then all of a sudden this week, from Wednesday, Thursday, and Friday, it just started rolling, right? And then of course dropping onto the 40 time frame. You can see, like here, yeah, we had a breakup here, pullback, sure. Then we break up again, but then since then it got not nice, right? Not nice. So I haven't touched US 30. And in fact, I'm actually going to stop trading US 30 because I see it doesn't really work with the way I want to trade. And yeah, I just don't like it. I had a bad experience with it. Maybe I'm biased, but I have much better understanding with NASDAQ and SPX personally. So right now, just massively going higher. So again, what I can say, well, nothing. Again, pullback, continuation, I don't know. So again, guys, that is indices. You can try to look at something. We can look at some 4-hour imbalances and stuff like this, for example. But we know that we have a lot of daily ones below. We know we have a lot of weekly ones below. So what is going to get filled? Where is the market going to respond next? I don't know. So again, keep longing until proven otherwise. And we have clear liquidity targets, all-time highs. NAS 100, same thing. We're breaking that monthly high right here. We didn't really break above it significantly, but it looks like we want to pop up to the upside right now. Once again, all-time highs are just, 700 pips away, which is pretty much nothing. Dropping onto the weekly time frame here, we also have a very nice pop to the upside. And you can see the market is starting to look like it wants to round up a little bit on the top, right? So the most recent imbalance, or the most recent reference point on the weekly time frame is this one. So we can expect that this one could get filled. And then from there to get potentially the buyers entering and targeting these highs. But again, if that doesn't hold, then of course I would expect like the market to revisit all the way down here at this sell to buy, which is pretty much what launched the move higher, or at least to come to revisit like the 50%, which is pretty much where that demand zone is lying. Daily time frame, it is tricky, right? It is tricky, and I observe Nasdaq every day. I back tested it, I paper traded, I also live traded a little bit. But when you have this happening on the daily, well, that pretty much tells you just do nothing, because it's unclear. It is not clearly bullish. It is not clearly bearish, right? Pushing somewhere so you know where it actually goes. It took out the monthly high and it started chopping around. So right now what we need is either clear sentiment bearish or clear sentiment bullish. So again, be careful. Be careful with Nasdaq, because what I also learned is that when you don't have a clear daily bias, when you don't know what the market is doing, just step aside and be patient. And that is the hardest part of trading, because we are going to go into the 40, we're going to go into the hourly, right? And try to find something that is just not there, right? So yeah, I mean, we can go to the 40 time frame. There was a break of structure here. The market pulled back, respected it, right? And there is the next break of structure here. The market disrespected it and broke structure down there. So right now, what is the market doing? It is bearish, and there is the supply right here. And yeah, the market is right now tapping into supply. So I can say, well, I'm bearish on the 4H, and I would expect this to happen, right? But of course, with the stock market being extremely bullish, the market can just open and whoop, start making all-time highs, right? So that is Nasdaq. That is Nasdaq. It is not entirely clean. We're coming inside this fall imbalance. But again, how important the fall imbalance is. Again, I try to look them on the hourly, and the fall, and the daily, and try to kind of conclude for myself what I'm going to be using and what is more important. Hourly time frame and 50-minute, like way too low. You can refer to them, but I don't like it, right? So right now, this is what I potentially looking for. If this high breaks, then most likely we're going to go higher. So let's see. It's either this bearish from here, or if you break up, bullish from there. S&P 500 also rolling very nicely to the upsides. Again, targets, all-time highs. We have one right there that is probably going to get reached first. Then maybe we get a little bit of retracement, and then we can get set up for a beautiful long. Weekly time frame also, like 5 or how many weeks? 1, 2, 3, 4, 5 weeks consecutive, bullish, weekly break of structure. There is that very recent high, which is also not taken. So we have two very good targets with a lot of liquidity resting above. And I would expect that maybe this one pops up. And then, of course, from there, we're going to see if we're going to start reversing lower, right? You can see, for example, Nasdaq is already taking this high right there. And there is no next high. Next high is pretty much all-time highs. While SPX, it has like two of these. And those two, NAS and SPX, usually move in tandem. Why? Well, because within the S&P 500 index, like the very big percentage of this market is driven by tech companies that are in Nasdaq. So this is why. Dropping onto the daily time frame, well, also daily time frame was absolutely tricky, but we never. So I had a short bias. I actually had a short bias, thinking that yeah, the market's got high, it's gonna retrace lower, come in and fill nothing that is below right there. This big imbalance was filled, pushed up, and then of course the 40 time frame maintained bullish. The daily time frame was bullish, so I had absolutely no reason to be looking for shorts on SPX. And there it is. Friday comes in after a whole week of a chop. Friday comes in and it makes the move. 40 time frame, like also it never shifted. Higher high, higher low, higher high, pulls back, higher low, higher high. Right here, there's the last one, and here we didn't break it. Right, and right now what we have simply is another 40 break. And yeah, I mean, you can take this one as your major high, but according to me, that is not valid according to my rules. So here, that is gonna be the one. So we have two of these, let's say. And again, guys, I mean, after being at this all-time high, right? Oh, sorry, all-time high. I keep saying all-time highs. After being at this high here, the market can do a lot of things. It can pop up to take liquidity, continue. A pullback, sorry, it can take liquidity and continue. Or from here, if it starts bearish, then that is going to be my ideal scenario, because then we're going to be getting from proper positioning in order to long the market into those liquidity areas. So I'm absolutely bullish on the indices. But again, the question is, how are they going to play out? So again, guys, don't look for shorts, don't look for reversals, as the market is very bullish right now. If you just focus on longs, your win rate is going to get increased pretty much with 50%, and probably you're going to be getting a lot better setup. So those are the indices. Alright traders, I hope you enjoyed today's analysis. Right now I am going to be getting very hard into study mode and very hard into reflection mode and backtesting, and really simplifying and systemizing everything and all the knowledge that I have accumulated this year, because it has been a lot. I did very well, but I also didn't do very well in the last months because of a very kind of new psychological mistake when it comes to myself. So again, we grow and we learn. Now, next week is going to be tricky because it's very full of news, but overall, DXY bias to me is bearish. So focusing on the bearish dollars, that means bullish euro, that means everything else that you trade bullish. But again, for example, we have a lot of those pairs right now aligning a little bit bearish on the FOIC. So again, don't let that kind of tell you that the market is topping up and we're going to reverse. No, a lot of those, so for example, EU is tapping inside weekly zones or higher time frame zones in order for them to reverse. So just wait for your alignments. And right, usually everything is bullish. I would avoid slightly bit pairs like AJ, for example. EJ, that is very bearish, but like long term it is bullish, but we have clear objectives right there from where each can actually turn long. NZUSD very bullish, NZJPO actually very bullish. UJ is shifting bearish right now. So again, let's see how that one is going to play out. G also bullish. We have clear liquidity objectives right there. So let's try to get into a long and not try to expect way too many pullbacks. Okay, GJ also, but we need to see a little bit more of an alignment for that to turn. Gold all-time highs, unknown territory. I don't know what we're going to be doing there. And indices absolutely rolling into the highs. So preferably try to stick long, right? And of course, wait for your entry model, wait for your setup and execute on that. Okay. So that's for me, guys. I hope you enjoyed it. I wish you a lovely weekend. I wish you a crushing week ahead of you. It's time to get into reflection mode as well. 2024, I do believe it's going to be great as we explored like some of the pairs were just consolidating the whole year. So again, get into reflection mode so we can crush 2024. Of course, we're going to be having 2 more weekly outlooks. So talk to you on the next one.